Good evening. Today we're going to kind of go through and discuss the CPI report and kind of see what expectations should look like for the week. I know a lot of people are sitting here and they're like, charts are moving up, things are looking positive. Keep in mind, those CPI reports are going to be that deciding factor, right? Those are going to decide the market's moving any higher than where they currently are. I would say personally, there's two bad scenarios and one good scenario, right? That's what I'm seeing currently for the CPI report. So I'd be extremely careful with just going with the good scenarios. I can give you this definitively. One good scenario would be that CPI report comes in under current inflation rates. Now, what that would do is that may then cause a rally in the market, but that's like a 50-50 scenario, right? We may see the Fed be like, all right, we're not going to raise as much. We're starting to see that deflation. We're going to lower rates a little bit, but you're still going to see a raise in rates. As far as pivoting, the Fed's not taking their foot off the gas when it comes to they're going to raise rates. Whether it be a little or a lot, it's kind of the deciding factor, and a little would actually be more bullish than bearish. So that could be a bullish scenario, right? Now, negative number one, inflation comes in exactly as expected, right? I could then see markets potentially rallying off of that and then dumping, aka looking for exit liquidity. The reasoning behind that is because if inflation is at expectation and or just a little bit above expectation, we could see definitely Powell come in either at the same rates or higher. Keep in mind, the more and more rates we go up, there's no bullish inclination, right? We have to remember that anytime rates are raised, money costs more to borrow. It costs more to buy things. It costs more to live. It costs more for rent. So if we understand all these things, then we know that as long as rates stay up, it doesn't matter if he raises rates less or more. As long as rates stay up where they are and continue to climb, that's more pressure on your pocket. It's more pressure on your dollar. It's more pressure on buying. So buying pressure in markets. So don't play into all these, rally scenarios. Okay. So moving into scenario number 3, inflation comes in above expectations. So higher than the 0.2 expectation. That would be extremely bad, because if it comes in higher, you may see a rally off of that too. But the reality is we're going to dump way deeper than where we've already been. And in my own opinion, right? Because that would signal to the market and tell the market through that CPI report, hey, guess what? Inflation hasn't slowed down. That means that Powell has to be more aggressive. All right. Now, these are just my own opinions, and I'm going to show you some other scenarios that kind of point in the same directions. And I'll tell you, I am probably pivoting between 2 and 3. I'm not pivoting for expectations to come in below current market expectations, just because they've been horrible at predicting pricing, right? It's typically, they predict usually under what it'll be. It's usually over whatever their predictions are. All right, as far as market goes. So now we're going to kind of look at JP Morgan, right? So the reason we're going to look at JP Morgan is because I want you to understand everything that's kind of going on throughout the week. This is going to be a loaded week. So people need to be really careful trying to trade these markets. Right now, I'm personally sitting on my hands. I took my profits on my highs. I already told people the breakouts. I told them where price was going to go. I took my profits on my highs. I'm waiting for market to kind of decide its moving factor. If it breaks out, it'll always pull back. I'll get another entry, so it's not a big deal. All right. So if we look at it, Monday, August 8th, there is no key economic data or economic data slated for release. Tuesday, August 9th. Now keep in mind, today's the 8th, tomorrow's the 9th. We get the NFIB, Small Business Optimism Index. So this is just like an optimism, report for July will be issued. This monthly data points and tracks how small businesses owners feel about their individual prospects and broader economy. When their reading increases, it means that business owners are feeling upbeat. When it declines, the opposite is true. With inflation still soaring, interest rates rising, and concerns about recession looming, small business owners aren't feeling that optimistic in June. I'm pretty sure they won't be feeling that optimistic now either. The index dropped to its lowest level in nearly 9.5 years. The number of small business owners expecting better conditions over the next 6 months hit its lowest level in the survey in its 48-year history. That's insane. That's insane. This is literally the worst economy we've seen probably in our lifetime. That's what it is. A lot of people don't understand that. People that are just like, yeah, that they're praising these different things that are going on in the world. You don't understand. Like, this is the worst the worst scenario the U.S. has been in a long time economically. And it's really insane that things aren't being addressed the way they should be, to where we can get these things normalized. And this is the whole government as a whole. Whole government as a whole is just completely off the rocker. I don't know what they're doing, but this is insane. Also, Tuesday, consumer inflation expectations for July are scheduled to be released, issued by the Federal Reserve Bank of New York. And again, this is New York, so New York, they fudge their numbers so hard on these things. It's kind of like going around saying, hey, we did a survey on how many citizens you have in your state, and this is how many you have. It's all just, it's there to fluff numbers and fluff expectations and everything else. This is all just like kind of BS. This data points tracks what consumers think will happen with inflation in given months. In June, inflation expectations hit a new high by increasing to 6.8%, up from 6.6% in May. That said, expectations for inflation over the medium or longer term did decline in June. So, okay, they declined in June. That people think they're longer term. That doesn't mean that they went down significantly. All right, they just declined. They really don't give the number on kind of what's going on here. Now JP Morgan, don't get me wrong, they have great stats and stuff like that. These are kind of like your go-to guys when it comes to looking at a lot of this information. It's just, when you get to places like New York and stuff like that, it's a little bit different. Wednesday, August 10th, the Consumer Price Index, that's what will be coming out August 10th. For July is released, issued the Bureau of Labor Statistics. This is a key economic data point that provides the market a read on inflation. Prices have been soaring for months, with inflation hovering at a 40-year high. As of June, it's running at 9.1% on an annual basis. Investors, economists, and consumers will be watching to see if price increases are easing, or as everything from gasoline to food is elevated. Yes, so we have to keep in mind that it's not just price coming down from the highs of where it was at, it's price coming down to where it was at normally. So we'll say where I live, gas was roughly about $2 a gallon. Gas is still on the cheapest about $4.50. It at its high, it was at like 6 something. So yeah, okay, prices come down, but it still hasn't equalized to anywhere near normalizing. This could just be a fluctuation in the current fuel pricing that could end up spiking again. The prices have not come down considerably at all. And then you also have to consider too, with inflation, if inflation is at 9.1%, you got interest rates at 3%, that technically our money is devalued by 12% when you put those two numbers together. You're paying 3% more on rates, and you're paying 9% more due to inflation. Count it up, add it up. It's not that hard to understand. All right, Thursday, August 11th, initial and existing unemployment claims for previous weeks will be published by the Labor Department. This weekly data points and tallies the number of people filing for unemployment benefits and those who are continuing to collect. In the week ending July 23rd, claims fell slightly but held near an 8-month high. Okay, 8-month high. This means that we are continuing to see more people go on unemployment. If we have this many jobs available, why are people going on unemployment? Think about it. All right, that's why the jobs number is fudged. It's very obvious what's going on here. Friday, August 12th, University of Michigan survey of consumers for August is slated for release on a preliminary basis. This leading economic indicator, tracks how consumers are feeling about their finances. Consumers' sentiment has been dropping as inflation remains stubbornly high. The cost of borrowing is increasing and gas prices are elevated. More of the same is expected in what? More of the same is expected for August preliminaries reading. So this means that we are not optimistic as retail. We are actually looking forward to more inflation because we know what's going on. So with this being said, I would say the 12th will actually be the real deciding factor on consumers and what consumers think of the current market. Now, another thing that we need to look at. So this right here, last updated a few months ago, May 25th, Commodities in a perfect storm, says ERG, as crisis starts super cycle. Yada, yada, yada. Basically, anything between 200 and 300 billion in investments per year will be required for mining industries to satisfy demand for the energy transition. So what they're essentially saying is with us going with the New Deal, we won't discuss that here because, people being able to eat is different from, people being able to feel good about themselves. But if we look at this right here, $200 to $300 billion in investments per year will be required for mining industries to satisfy demand for energy transitions. He said with much of this invested into the mining of copper, nickel, cobalt, and other metals. In an environment of high prices, supply chain pressures, expects companies and countries to stockpile strategic raw metals, including oil, copper, cobalt, and other metals. If you get small supply disruptions, you are going to see big swings in prices. So small supply disruptions can cause big swings, is basically what they're saying right here. So another key indicator, I would say, here's Investopedia. So they came out with this article August 8th, 2022. And it's basically, has inflation peaked? This week's CPI updated could offer clues as to whether inflation has peaked. This week, investors will find out whether or not inflation has peaked. On Wednesday, the Bureau of Labor Statistics releases its consumer price index for July. Economists predict a rise of 8.7% year over year with a 9.17% jump in June on a monthly basis. The CPI is expected to rise 0.2%. So every time they expect rising, I always expect more because they've been wrong every single time on these. In July, after jumping 1.3%. In June, which marked the biggest monthly gain since September of 2005, the core inflation rate, which excludes volatile food, and energy prices, is seen increasing 6.1% from a year ago, up from 5.9% previously. These look like small numbers. You're like, oh, it's just 0.2. These are big numbers. That's huge. You have to think about the amount of money that flows in these systems, right? On Thursday, the BLS will also release its producer price index on Thursday for July. The consensus estimates it is for a 10.4% increase from a year ago, down from June 11.3% increase. The core PPI is expected to rise 7.7%, down from 8.2% from the month before. So what they're saying is you start at 0, you're at 7.7. Previously, you start at 0, you're at 8.2. You're still getting huge increases in inflation, just ridiculous. Over the past 3 months, commodity prices have fallen dramatically, which could impact the inflation data. The price of corn has dropped 24% over the past 3 months, while wheat price have fallen by 27%, and soybean prices are down by 14%. Oil and other energy prices have also fallen significantly. Light sweet crude is now down to $88 a barrel, below where it had been before Russia invaded Ukraine. Oh, I shouldn't have said that. I hope I don't get demonetized. All right, or not demonetized, but get my video kind of blacklisted. Retail gas price have fallen sharply, now approaching a national average of $4 per gallon. A national average. We were at a national average literally like a year or two ago of $2 a gallon. We're still 2x up from that. In the US, compared to a peak of over $5 a gallon in June, the highest it has ever been. Ever been. $5 is the highest gas has ever been nationwide. Even though inflation may have peaked, again, this is an assumption, consumers have stretched their balance sheets extensively, according to New York Fed quarterly report on household debt. See that? Household debt. According to the report, U.S. households' debt surpassed $16 trillion for the first time on record during the second quarter, boosted by higher balances for mortgages, auto loans, and credit cards. While defaults and bankruptcies remain low, more months of high prices could compel consumers to hit the brakes on their spending, said Caleb Silver, edit chief of Investopedia. Now, the reason that what they're kind of saying here is that the Fed needs to keep his foot on the gas because we haven't slowed down yet. That's layman speak for what they just said in this sentence. Okay, we are still continuing to spend at a rapid rate, and the Fed needs to keep on putting his boot on our neck to keep us, from spending as much and slowing down. So, consumer price index, CPI year over year, percent change. Look at the percent change here from 2020. This is 2020, right? That is 2020. Look at where we're at right now. Look at this, 9.1. People are saying that consumer buying's curving. We curved right here too. There's no difference. It doesn't mean we won't keep going. That people will slow down on spending. You could see price continuing up with inflation. Inflation has ran way past our buying. We've fallen back over here. We fell back over here, right? We fell back right here. We fell back right here. We could just continue to keep pushing up. And this is the problem right now with the stock market and assets. Is people keep on putting all their bags back in, hoping they hit a bottom. All those people that sold the top, they're buying back in, right? They're buying back in on hopes that we hit the bottom. Hey, this is the bottom. This is the bottom. If this report comes out the wrong way, no way. No way. So inflation goes up, you won't see it at all. It'll be bad. So let's kind of look at some of these commodities that they're talking about, and they keep on saying, oh, this, and that. So let's go over a few charts. S&P. Remember this discussion? S&P. Look at that. Rejection. Right on the zone. Still expecting lower lows. Coinbase. Hey, BlackRock bot is partner with Coinbase, everybody. Just like I said, buy the rumor, sell the news. BlackRock bought in, announced the news, everybody bought on top, and they dumped on retail. Have fun. Why you don't get into those kind of things. All right, let's move into our next chart here. And let's look at AMD. Well, that looks like a nice forming head and shoulders. Oh, look at that. We closed right below resistance. Nothing new there, right? Used to these kind of plays. They keep playing us in the market over and over again. All right, let's come over to Tesla. Expectations are still playing out. Still expecting that full fallback of 50% for Tesla, bringing Tesla back into the $500 range where it was previously. I called the $700 range, guys. Definitely called that. You check out my Twitter, it's on there. I called it at $1,000. I was like, look, if Tesla came back to 700, would you be ready or would you be mad? And what did it do? Sure enough, came back to 700. All right, let's move into the next one. And I'm not trying to brag. I'm just saying these things are so obvious. The patterns are so obvious. You got a widening wedge here. You got an what's it called? Incline wedge here, right? The patterns are obvious how they're building. Just pay attention to the pattern. That's all it is. All right, so moving into T10. I know I put a lot of stuff on here. Does this yield curve look to be coming back up? Does it look to be coming back up, or is it still down here? I believe it's still down here. So typically when we hang out around the bottom here, that's not a good thing, right? And this little spike right here, these things happen just before the yield curve starts to fill out. So these look like they're only going to get worse here. right? And housing's going to start taking a hit from this too. Let me see here. Come over here and we go to, let's go to Twitter. Pretty much LOL stock at this point. Still voting long. Again, no real reason to break out of the zone. They're in a lawsuit right now with Elon. US oil. Everybody's saying $88 a barrel, bragging, yada, yada, yada. Oh, look at that. Look how oil picked up. Kind of funny, right? Oil picked all the way back up there. Definitely keep your eyes on oil. Oil could definitely start going long at any point from here. We're on the monthly on this chart. Look at the daily. Makes a little more sense. We broke through support, coming back and retesting. We could see more downside, but I'm expecting oil to kind of break out at some point from here. All right. AMD, discuss that. AMD rejection perfectly on resistance. So looking for AMD to pull back. Lucid in a great trading range. If you're looking for a high and a low trade right here, you got, $16 and $20. Amazon already rejecting the heavy resistance. Look at that. Look at how much it's rejected too already. E zone. You got your swing low, your order block right here. Boom. Come across. There it is. Disney. Boom. Look at that. Disney tried to break through resistance, and what Disney do? Fell right back. I don't expect this rally to hold at all for Disney. They're going to come right back on that rally. All right, Google consolidating under resistance still, right? This isn't even hard. Like, hard resistance all the way up here. Like, Google's going to just fall over. If that report's bad, Google's going to fall over. Matic, another one of those, just playing the top. Sol, looking really bad. Breaking down, actually, in this current bear flag. ADA, moving into a bearish pennant. Bitcoin's still in a bearish channel too. So nothing too positive about BTC at the moment. Just kind of watching it play out. We'll see if price pushes up one more time, gets another leg to 26, 25K, or if price pulls back and then goes higher, right? That's what we need to go higher, is we need the price to pull back, because we're going to remain in this channel, it looks like, and as we're playing the upside, eventually this will turn to a downturn market. We got Ethereum again building long, so people have to be careful. Like, if you're looking for consolidation goes sideways, which means price will go like this and it'll re-meet these bottoms. There's no reason to buy up here. No reason to buy the highs. Why would you buy 2x ETH when you can wait for ETH to pull back and get it where it was at anyways, right? Expectations are to go lower, but let's say you're afraid it won't go lower. Well, let's buy when it double bottoms. I expect markets are going to be in a stagnant state for a while. Even if things look optimistic, they still won't be positive, right? Because the Fed could come out and be like, oh, we're going to raise a little bit less, right? Or whatever. But guess what? Rates are still raised. Money still costs more. That's just what it is. So these are kind of some outlooks for today. I'll cover the housing market next time, but something really interesting about the housing market is we're already starting to see weaknesses in certain areas. And, I think the housing market is going to take a little more time to play out, but, it's definitely going to be a bubble pop again for housing. Watch. A lot of people keep on claiming, oh, no, this time's different, these and that, everything else. Big players are offloading houses big time. There's a couple of houses I was looking at specifically that are down, a good 25% from their all-time high pricing. So when you're dropping houses by those kind of rates, you're looking to offload big time. And these are big companies that are doing this. So definitely be careful. All right, guys, until next time, we know expectations, right? I gave you the two good, the one bad scenario. The two bad, one good scenario, that could potentially happen. And until next time, I'll see you later. Have a good one. Bye.